Good morning, everyone, and welcome to another edition of the Forex Technical Market Update for Tuesday, June 23rd, 2015. Okay, in front of us, we have a daily chart of the euro versus the USD. And so far this morning, the US dollar is up across the board, just about up against the major currency pairs. Australian dollar, it's up against the British pound, the euro, the Canadian dollar, the Japanese yen, the Swiss franc. It's up against everything so far this morning. Now, going back to the euro, I just want to point out that we're still in this consolidation pattern. And a tip for working with a consolidation pattern, swing traders would just have to sit back and wait until the pattern breaks. But if you're a day trader, you will find that your support and resistance areas work pretty well in a consolidation pattern. So using things like pivot points during the consolidation pattern is a smart move. For example, this market topped out here near the R1 for the day. Coming into the day, it topped out near the daily R1 and continued down. Okay, so for greater direction into where the euro is going, we have to see a breakout of this consolidation pattern. That will then give us clues as to where the euro is going. Okay, taking a look at gold again, we are in a broader consolidation pattern, and the weakness that started yesterday continues here into today, with the market looking to go and try and challenge this low here near 1162, and we'll be looking to see if the market is able to close below that 1162 level in gold. British pound, although the British pound is down against the dollar, it's doing fairly well against other major currency pairs. It's just slightly down against Australian dollar, and it's even against the Japanese yen, and against the euro. The British pound is actually gaining, as you can see here. And what you will notice, or what that you can see, is that the British pound is still standing up better than most of the majors. So if the British pound is to rally from here, or if you are looking to play dollar weakness, in terms of buying the dips, the British pound is a currency I believe will outperform the others. Now, one of the weaker currency pairs is the euro, and we see that the euro is down against the British pound, against the US dollar. Let me take a look at the Canadian dollar, where we said we are looking at this market here. The British pound is down against the Canadian dollar also, and this not the British pound, the euro is down against the Canadian dollar also. And this is a market that I am looking to trigger a short if it goes down a little bit more. As you can see, the market is in a downtrend, and we are getting sell signals near this Fibonacci retracement level. Let me just draw the Fibonacci retracement level for you. Go from the swing high down to the swing low. Market topped out near the 786 retracement level here. So it's the very top. We have a trend line. We have a Fibonacci retracement. And we have a sell signal forming soon. So this could be a good longer term play. And what we'll be doing is looking to see if the market can go down to this 130 level in the euro versus the Canadian dollar. So this is a market we will be monitoring. And remember, if you are going to take a trade like this, it's good to use proper risk management. Do not risk your entire account on just one trade, because that is a sign of poor trading. And if you do that often enough, you will end up losing your entire trading account. So over the next couple of months, we'll be monitoring this market, euro versus Canadian dollar. It's, the setup is similar to what we experienced with the British pound versus the Japanese yen. And for those of you who are curious, we are still holding this market in our portfolio, and we are positive over 1,000 pips uh, with our for our members. So this trade is working out pretty nicely for them. And the British pound, we're still long the British pound, although it's pulling back slightly, but we're still in the profit on this market. If it declines a little more, what we're going to do is get stopped out, and if we get stopped out, we will still end up with a slight profit for this market. Okay, taking a look at, because I get a lot of questions on the stock market, and taking a look at the stock market, let me not look at the S&P 500 and let's look to the Nasdaq. We see that the Nasdaq is in a pretty broad uptrend here. Pretty strong move. And the thing is, the principles that we go over here in the Forex market can be used to trade the Nasdaq index. I mean, once you become good at trading one market, using these principles that we're speaking about, you'll become good at all markets. So you can greater diversify your trading. But let me just highlight what's happening on the Nasdaq. And as you can see, this is a monthly chart of the Nasdaq, and this high, this candle that you see, was a high that was made in the year 2000. I know all of you can remember the dot-com bubble, but the Nasdaq is not exactly at that point. But as you can see, the market is at a closing high. These levels, the close last month, was the highest the Nasdaq has closed ever. And what I suspect is that this market is trying, it's definitely trying to reach for these highs. And the all-time high, based on this chart here, is 4,816.35, and we are at 4,542. So we could see some upside left in the Nasdaq as the market tries to reach its all-time high. But just to point out the difference between the closing high and the all-time high, as you can see that this market went up. We have a huge candlestick. Let me just highlight it. This candlestick here, you see that the market did not close it. Although it went up, the market closed down, and then the subsequent candle was a bearish candle. And this is a classic evening star candlestick pattern, reversal pattern. But notice the market made a high but did not close at the high, while in this recent rally with the Nasdaq, we have a new closing high, as this candlestick has closed at the highest level forever in the Nasdaq. Okay, I just wanted to point that out because we do get a lot of questions about the stock market, and it's a good lesson in how to read candles and what you should be looking for. So before I leave, let me just look at the Australian dollar, and we spoke about the fact that this $76 level, 76 level, is acting as support. And always keep in mind and watch gold. If gold continues to decline and move down, we could break down these levels in the Australian dollar. So it's good to keep an eye on what is happening in the gold market. Remember, if you want to have these signals traded in your account, I get numerous emails uh, from members. Once they join, they say, I wish I joined months ago. Remember, these markets are always giving opportunities, and the longer you wait, is the more you are missing out. So I urge you, click on the link below to get the signals in your trading account copied automatically. And the way I speak about this service a lot because I'm very proud of the service, and it takes time to trade the signals profitably, and it takes effort on my part. And I know that I can help other folks who are struggling with the Forex market, folks who have never made a profit in the Forex market, just piggyback off of the trades that I am making. And you will see how we're able to control risk and extract profits out of the market. So I'm very proud of the signal service, and I'm happy that I'm using my knowledge. I'm able to affect other traders and able to trade for other folks profitably. Okay, thank you very much. If you'd like the signals, click on the link below, and I hope you have a good day. Thank you.